Today, let's go over top 10 Canadian ETFs that you should consider adding to your portfolio. If you buy these in your TFSA account, you don't pay any tax on the money that you make with these ETFs. Hello and welcome back to my channel, where we talk about investing, personal finance, and dividends. If you're new here, consider subscribing to my channel and smashing that like button if you enjoyed this type of video. Let's get started. ETF stands for Exchange Traded Funds. These are similar to mutual funds but have way lower management fees. These are traded on the stock market as one bundle, but inside there's tons of different types of investments. Instead of using a chunk of your money to buy one big piece of a company, you use your money to buy multiple small pieces of different companies. You're essentially avoiding putting all the eggs in one basket and potentially dropping it. You put an egg in multiple different baskets. So if you drop one basket, you still have another basket with eggs to make your scrambled eggs. Benefits of buying an ETF. Number one, we don't know what stocks are good, and we don't have to do that research. Someone else does this work for us. Number two, we don't have to manage the percentage that we invest in different sectors. Generally, ETFs are diverse in nature, so you have exposure to multiple areas by just picking one ETF. Number three, not everyone has mad stacks of cash to buy some of these ridiculously expensive stocks. For example, one stock of Shopify is about $1,300. Me broke. I don't have that kind of money to buy one whole stock of Shopify, but I can buy an ETF that contains a percentage of Shopify, so I can still benefit from the growth of Shopify along with multiple other companies for much cheaper, like $25. I'll go over some of these ETFs soon. A quick reminder on a TFSA rule that most of us miss. Any money invested in a non-Canadian market is subject to foreign withholding tax. It's typically a small percent and it differs from country to country, and it is charged for dividends received from foreign stocks. For US companies, the foreign withholding tax is 15%. When you get paid dividends, the foreign withholding tax is deducted from the amount paid and the rest goes into your account. If you want a rundown on how TFSA works and all the rules and regulations, check out my other video where I go in full detail. Answering the burning question. Yes, you do pay foreign withholding tax even if it's an ETF that is traded on the Toronto Stock Exchange, but it holds foreign stocks. For example, Vanguard's S&P 500 ETF, which basically tracks the top 500 US companies. This is a great ETF to hold because on average, the S&P 500's annual return is 10%. This is a great ETF to hold in your registered retirement savings plan because the foreign withholding tax does not apply for an RRSP account. It's not so good to hold in your TFSA account because of the 15% foreign withholding tax. So for today's video, we'll be going over top 10 ETFs that is completely Canadian companies, which you can hold in your TFSA account and enjoy the tax-free nature of earning more money in this account. Let's get started. First ETF on the list is a broad market ETF. So basically, it contains all Canadian stocks. The ETF we're looking for this is either iShares Core S&P TSX Capped Composite Index, ticker symbol XIC, or Vanguard's Canada All Cap Index, ticker symbol VCN. Both of these broad market index don't have the same companies with the same percent distribution, but have a very similar idea of holding many Canadian stocks. Anywhere from small companies like Sleep Country Canada, why buy a mattress anywhere else? Ding! Is it just me, or do you guys sing the commercial every time you read it as well? It's so catchy, man. Such good advertising. Anyway, back to topic. This ETF holds anywhere from small companies to large companies like TD. XIC holds 221 companies and VCN holds 188 companies. The key factors to consider when analyzing an ETF is the management fees and the MER. Management fees for XIC is 0.05% and for VCN it's also 0.05%. Management fees is money used by the ETF issuing company to pay their financial advisors to make decisions based on the category of the ETF. It's basically like maintenance fees for the ETF. Then we look at MER, which stands for Management Expense Ratio. This ratio includes management fees along with the money that they use to buy and sell these underlying companies in the ETF. MER for both of these companies is 0.06%. Now it comes down to how these ETFs have performed over the years. XIC has a dividend yield of 3.35% and VCN has a dividend yield of 2.79%. I would say, considering these basic stats, XIC is better, but we can dive a little deeper and look at the percentage distribution for the top 10 companies in these ETFs. You could be like, ooh, VCN holds 6.57% of Shopify when compared to XIC, which only holds 5.95%. And I want more Shopify, so I'm gonna buy VCN. You can buy either VCN or XIC because if you look closer, the top 10 companies are pretty much identical, but the percentage distribution is a little different. Another stat that could help you make your decision is the percentage distribution on the different sectors. You could be like, XIC has 15.28% in materials compared to VCN, which only has 14.6% in materials. And I want to be more diverse, so I'm gonna go with XIC. Buying an ETF that opens you up to the entire Canadian market is really good because no matter what happens in the stock market, you'll still be making money. Every ETF issuer company has a similar category of ETFs. For this video, I'm picking ETFs from iShares and Vanguard. But there are more ETF companies like BMO Asset Management, Horizon ETF, Purpose Investment, Invesco, and so on and so forth. You can definitely compare similar ETFs from different issuer companies like we just did by looking at management fees, MER, dividend yield, percent distribution of top companies, and percent distribution of sectors. Now that you know all the acronyms and all the stats we need to look for, let's speed through the rest of the list. Next on the list is XCG, which is the iShares Canadian Growth Index. This ETF focuses on Canadian companies that are going to be growing in value based on the financial report. Some top companies in this ETF are Shopify, Enbridge, TC Energy, and Canadian National Railway. It has a management fees of 0.5% and an MER of 0.55%. The management fees is really high on this ETF because this ETF is actively managed, meaning there's a lot more work to analyze the financial reports of each of the 43 companies in this list every time they release a financial report. And they have to make a decision whether to hold more percentage of the stock or hold less percentage of the stock or remove the stock from the list or add a new stock to the list. The last ETF that we looked at is less work and less decision to be made. It's just all Canadian companies. So it's passively managed and they don't change the holding percentage in that ETFs that often, which is why XIC's management fees is 0.05% compared to XCG's, which is 0.5%. It has a dividend yield of 1.8%. Since this ETF is a growth ETF, we expect the price of the ETF to go up rather than the dividend yield going up. If you're looking to invest in Canadian growth companies, this is a great addition to your portfolio. In this channel, we love dividend investing. So the next ETF on the list is CDZ, which is iShares S&P TSX Canadian Dividend Aristocrat Index. This ETF focuses on Canadian companies that have paid dividends for a very long time and have increased their dividend amount year after year for 5 years in a row. It has a management fee of 0.6% and an MER of 0.66%. It has a dividend yield of 4.71%. Next on the list is XEI, which is the iShares S&P TSX Composite High Dividend Index, or VDY, which is Vanguard's Canadian High Dividend Yield Index. This ETF focuses on Canadian companies that pay a high dividend. XEI has 75 companies in the ETF, while VDY has 51 companies in the ETF. XEI has a management fee of 0.2% and an MER of 0.22%. And similarly, VDY has a management fee of 0.2% and an MER of 0.22%. XEI has a dividend yield of 5.89, and VDVI has a dividend yield of 4.78%. Next on the list, you guessed it, is another dividend-based ETF, XDIV, which is iShares Core MSCI Canadian Quality Dividend Index. Man, that's a mouthful to say. This ETF focuses on select 20 companies that have a solid financials indicated with above average dividend yield and steady increasing dividends. It has a management fee of 0.1% and an MER of 0.11%. It has a dividend yield of 5.71%. Next on the list is XRE, which is iShares S&P TSX Capped REIT Index, or VRE, Vanguard's Canadian Capped REIT Index. These ETFs focuses on REITs, which stands for Real Estate Investment Trust. These companies have a bunch of properties that they rent out and collect money. XRE has a management fee of 0.55% and an MER of 0.61%. And VRE has a management fee of 0.35% and an MER of 0.39%. XRE has a dividend yield of 6.36%, and VRE has a dividend yield of 6.62%. Next on the list is FIE, which is iShares Canadian Financial Monthly Income ETF. This ETF focuses on common shares, preferred shares, and corporate bonds based mostly on financial sector. It has a management fee of 0.65% and an MER of 0.96%. This is one of my favorite ETFs. Even though it has a really high management fees, it also has a high dividend yield as well. It has a dividend yield of 7.85%. Next on the list is XESG, which is iShares ESG Aware MSCI Canadian Index ETF. This ETF focuses on small to large Canadian companies that have a good ESG rating. ESG stands for environmental, social, and governance. This rating takes into consideration the impact that these companies have on the environment, the diversity of hiring more people to work for them, and also, does the company only care about making money, or does it have a purpose in our society? This ETF has a management fees of 0.15% and an MER of 0.23%. It has a dividend yield of 2.18%. It is pretty low compared to these others on the list, but it is a socially responsible investment. Next on the list is XBB, which is iShares Core Canadian Universe Bond Index, or VAB, Vanguard's Canadian Aggregate Bond Index. These ETF focuses on Canadian bonds. Bonds are similar to lending someone money and a promise that they will return you the principal amount along with some interest on a set date. XBB has a management fee of 0.09% and an MER of 0.1%. And VAB has a management fee of 0.08% and an MER of 0.09%. XBB has a dividend yield of 2.58%, and VAB has a dividend yield of 2.51%. Last but not the least is CVD, which is iShares Convertible Bond Index ETF. This ETF focuses on convertible bonds, which are issued by corporate companies and banks. Convertible bonds are similar to regular bonds, where you lend someone money and they return you the principal amount along with some interest on a set date. But with convertible bonds, you have the option to own the underlying stocks instead of the bonds. It has a management fee of 0.45% and an MER of 0.49%. It has a dividend yield of 4.7%. If you like this video, you should also check out my top 10 Canadian stocks video, which I'll link right here. I'm still not a financial advisor. I'm just a random guy on YouTube. But you should check out these awesome ETFs mentioned in this video and see if you want to add them to your portfolio as well. As always, make money work for you, not the other way around. You can check out Wealthsimple Trade and get started with investing today. I have another video that walks you through the setup, which I'll leave a link in the description box below. I'll also leave a referral link for Wealthsimple Trade in the description box. If you use that link to sign up, fund your account $100 and buy some stocks with that, you'll get $10 and I'll get $10 as well. Let's take personal finance into our own hands and make our money work for us. If you enjoyed this video, be sure to smash that like button and hit that subscribe button for more content like this. See you guys later.